Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for an impulsive structure to the upside. Wave 1 is already finished and the common target for wave 2 is between the 618 and the 786 Fibonacci taken from the low to the high of wave 1, giving you a target between 68.6k and 67.7k. The invalidation is taking out the low at 66.6k. It is common for a wave 2 to be a short, deep and simple corrective structure, most commonly a zigzag in an ABC, which is a structure that we can count in this move towards the downside. It also is a deep structure as it hit the golden pocket, which is a common target for a wave 2, and it is definitely very short, but it is so short compared to wave 1 that the probabilities would be higher for a bigger 3-wave corrective structure, after which we then look for continuation, as this move down over here finished far in front of the 0.382 fib time taken from the start to the end of 1, which is usually a minimum target for wave 2. In other words, it is most common for a wave 2 to finish the correction at least after the 0.382, which it hasn't done with this low over here. So therefore, a bigger 3-wave corrective structure has to be considered for wave 2. If we at least look at the scenario where your wave 2 is finished and we look for impulsive continuation to the upside, then the first structure to the upside here is counted as a wave 1, looking for 2 and then a wave 3 to the upside. The common target for 2 is the 0.5 to the 786 Fibonacci taken from the low to the high of 1, giving you a target between 68.9k and 68.5k. The 382 is an uncommon target at 69k and the 886 is very rare at 68.4k. What you can see, however, is that after we started ranging, price has never actually hit the 0.382. And that is rare, especially for a wave 2. Not at least hitting the 382 over here is a very rare occasion. The first two lows came quite close but didn't actually touch the line. And it is not only rare for a wave 2, also for a WXY or an ABC, not at least touching the 0.382 is rare. So therefore the probabilities would still be higher to then move down inside this box compared to, let's say, a 112 where your first two is already finished but didn't even hit the 0.382. The other bullish scenario is a bigger 3-wave structure as explained in then a WXY, where wave W is a zigzag to the downside in an ABC looking for X and then a wave Y. If we also open the additional support and resistance areas, then to the upside we have important resistance 70.8k to 71k, and to the downside important support between 67.6k and 67.8k. These could be interesting targets for both a wave X as well as a wave Y. The bearish scenario is an impulse to the downside in a wave 1, 2, 3, 4, 5. Common target for 4 is the 382 to the 0.5, 70k, 69.5k. The 0.618 is an invalidation at 70.4k. If price moves to the upside, hits the 618 before taking out the low at wave 3, it invalidates this scenario, though the probabilities for this scenario are lower already because this wave 4 is incredibly long in time compared to your wave 2, which lowers the probabilities. We do have some CVD divergences. We had some bearish CVD divergences as price moved to the downside. Most of these have already played out. And then we have a little bit of bullish CVDs over here. However, what I would like to see to also support bullish continuation would be to see some more bullish CVD divergences on, let's say, a 3, 5 or 50 minute time frame more locally. Because as you can see, we still move down and yellow is still moving up, continuing to create bearish CVD divergences, while on blue we have a bullish one. So on blue we have a higher low in price, but here we have a lower low on the CVD. That's a bullish CVD, but just for some extra confidence, I would like to see some very low time frame bullish CVDs coming in as well. And if we then look at the probabilities of the different scenarios, then the probabilities are a bit higher for the bullish scenarios because of the size of this sideways range, lowering the probabilities. This is a wave 4 compared to a very short wave 2. However, price did not yet hit the fib box down here. If we look for a wave 1, 2 and then a wave 3 to the upside. So locally the probabilities would be a bit higher to still hit that box to the downside, or if we do move up, to look for a wave W, X and then a wave Y to continue this range. Proof of support is of course always important, and the invalidation is at 66.6k. On the number 2 spot we then have the bearish impulsive structure in a wave 1, 2, 3, 4, 5 as currently a lower probability scenario. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.